You're welcome, traders. Today we want to just do a recap and also make a forecast on what is expected to happen on gold this week. Okay, so today is Sunday, and I hope most of you are on Sunday, except for maybe a few. Really, is there any country that is on Monday yet? No, there's no. We are all on Sunday. So this is a signal that I gave on gold on Friday. If you are in our Telegram group, you saw me give you guys this cup and handle. This cup and handle. Yeah, so there was a handle made right here. This was our tiny handle over here. There was a handle made there. So a cup and handle, you all know, it's a bullish pattern. So we expected the market to go bullish, and it's been going bullish ever since. Yeah, it's been going bullish since it broke the cup and handle. So it reached a point here where many people thought it would go bearish for some time before it continues up that point. But the news is this market wants to push higher and higher, and probably go above 2700. Yeah, above 2700. So this cup and handle should be respected, should be trading with respect to the cup and handle. Let me try to just make this chart clear. Okay, so we want to check on what to expect this coming week. What is gold trying to show us? What is the next movement? And what is the global geopolitical influence on gold? Very important. Very, very important. Right now, we have a situation in the Middle East. We have Israel and Iran and Hamas and Lebanon. A lot of things, and the US dollar is at stake. Yeah, so we really need to know one major thing. We need to know how that war, geopolitical event, is influencing gold. Yeah, that's also one thing that might not be captured on your news site, but you should be very, very careful about it. Yeah, it's something that overrides everything that you see on the chart. So if you can capture that and analyze that and trade that, you should be well positioned in the Forex market. Okay, so let's do a top-down analysis on gold. So let's just do with our monthly impression. So you can see gold is bullish monthly. So monthly tells you that gold has been bullish since it broke this consolidation. Since it broke above that consolidation, it's been going up. It's been bullish. Again, you check on the current candle, the current month candle. The current month candle should also tell you a lot. I want you to check on the lower week. Let me just zoom it so that you can see. You can see that we have a lower heavy rejection than the current rejection at the top. So if you just analyze the lower week, you see we pretty much have a stronger rejection to the downside and some small rejection to the upside, which is still in play. The current month has not ended. So again, it tells you, it gives you two things with this candle today on Sunday. It tells you that the bears are overpowered by the bulls, as you can see. Yeah, so that means the bulls are in control in this market, and up to here are the bulls. So if you want to know what the bulls control, they control this monthly candle from here all the way to here. Okay, so they're in control of the lower rejection and the body. So in other words, you say the bulls are more present in this market than the bears. Then we go up again, we measure the tip of the current candle, the high of the current candle, and the current close, which is actually not a monthly close, but we just want to check on that week. So you see that week there, that is now what represents the bears in this market. So these ones are the bears. I think I should give them a red candle. So those are the bears in this candle, and let me give this one green to just denote we are having this power of the bulls. So the bulls are the green ones and the bears are the red ones. Yeah. So if you want to know who the bulls are, let me just remove this so that you know and see. The green are the bulls and the red are the bears. Okay, so you have that now. So monthly we have bulls in control. So let's step down to the weekly chart and see what's happening weekly. Perfect. So if you have a look at the weekly chart, current candle weekly chart, you see the same impression. We still have fewer selling force and much stronger buying force. So the bulls are the green, the bears are the red. All that tells you one thing: who is in control of this market. Now we want to include the previous candle, which is the bear candle, the red candle, to know much more about this market. So if you check on the previous bear candle, you see a heavier downward rejection, yeah, with a small body and a smaller upward rejection. The same thing applies to the current candle: a heavier lower rejection and a smaller tiny upper rejection. So this current candle forms something that looks like a hammer, yeah, a weekly hammer, but we don't want to decide on that just yet. Yeah, look at the third candle as well. The third candle tells you that the bulls are pretty dominant here. Look at the body, and also look at the lower rejection of this candle. It tells you a lot. It tells you that the bulls have more room to play than the bears. So let's drop down to the daily. Yes, in the daily we have something interesting happening. I think I should delete everything and now analyze the daily. So the daily tells you just a lot. Okay, the market has been on a daily downtrend, a short little daily downtrend, as you can see somewhere here. I think I should now change my arrow not to confuse others. So you can see the market has been on a short downward movement here. Then the bulls didn't wait for the market to push down more. They came in and did something here. If you know this, in the comment section, put it. What is this candle pattern known for? These two candles have covered. Yeah. So if you are sharp enough, you probably know it's a bullish engulfing candle pattern. Now, since we have a bullish engulfing on a daily candle, we need to check on the candle that we need to analyze the candle that followed after the bullish engulfing, which is this guy here. So you just want to cover the body only. So this is the current candle. Yeah, the current candle. See, the current candle is pretty dominant, very powerful, all the bulls swam into the market and started pushing the market impulsively up. And if you analyze it, it looks more like an open Morubozu. Yeah, an open Morubozu is a candle that open to the flat open, like no rejection of the open. So it's an open Morubozu, and it's been going up after the, what do you call it, the bullish engulfing. Yeah, so in forex trading you learn to tally up patterns. This tallying of patterns gives you a stronger influence and a stronger decision making. So like this one, we have bullish engulfing. So BE, we're gonna use BE for bullish engulfings. I think I should say BL for bullish engulfing, BLE, bullish engulfing, and yeah, we're gonna use BRE for bearish engulfing. So in this case, we are concerned with the bullish market, so we're gonna use BLE. Yeah, and we need to now step down to 4 hour to completely confirm. 4 hours should be your last confirmation time frame, because anything below 4 hour will just be entry and confluence. You're looking for confluence, liquidity, and entry points. Confluence, liquidity, and entry points. So this is actually the 4 hour time frame. Let's also check on the 4 hour time frame. So till here, we've known that monthly is bullish, weekly is bullish, and daily is bullish. And daily has also given us a bullish price action, which is a bullish engulfing. Now, if you go to daily, monthly, we also had a price action on monthly. It's loading. Let me see if it's gonna open it. Yeah, so on a monthly candle, price action, you should see 3 white soldiers, previous candles. White soldiers, you talk about white soldiers, not current candle included. Yeah, the previous candle should be 3 white soldiers. So for our analysis, 3 white soldiers, we're gonna give them an abbreviation of 3 white soldiers, 3 WS. Yeah, so we have 3 white soldiers here on a monthly gold. And weekly, let's switch to weekly. Yeah, on a weekly, we need to also check on another thing. So on a weekly, we have something. A weekly, there's an ICT concept here. So I want you to look at this rally. Look at this rally. So that one is a 3 white soldier rally. So we have a 3 white soldier, but there's an ICT concept here. So right in the 3 white soldiers, you look for fair value gaps, you look for order blocks. So in our case, we had a fair value gap right here. Okay, right here. So let me make it big so that you see what I'm talking about. So this is our fair value gap. Let me just make it here. So fair value gap was between this high and this low. Okay, so why did this candle get repelled right at the fair value gap? That one also confirms to us that this was a powerful gap in the market, and the market reacted to it. In other words, it got mitigated, and once it got mitigated, that means the market would now go bullish. Okay, now there's always an ICT pattern that really works, especially if you follow these 2 pair. Like a fair value gap becomes more important if it succeeds, or if it comes after an order block. So if you go down here, Now before we get to that, let me just arrange that. So we have a good order of operation would be, the first one is a an order block. Then the second one is a fair value gap, okay, or inverse fair value gap. Yeah, so if you have them in this order, like the first one to identify is an order block, then the second one is a fair value gap or IFVG, then you are in the right place. So you just wait for the market to come and mitigate FVG or IFVG, then you make your entries. So where is our order block? You probably see where our order block is. Let me make this big. So our order block, this is the pattern. So our order block is right here. Take the top and the high and the low of the candle, the opposite direction. Then you draw it like that. So I want you to understand this properly well. If you struggle with order blocks, I want you to learn that if this low came and tapped into this, okay, so let's say it came and tapped into this order block, it would render that order block useless, mitigated, and price can now move anywhere. Like it can still go bearish, heavily bearish. Yeah, so since it didn't mitigate the order block, it went all the way up and created the fair value gap. Okay, so let me just mark this right. We have our bullish order block. So BLOB. So bullish order block. Then we have our fair value gap up here. So this is the fair value gap, fair value gap. So you can see the order from number 1 to number 2. If you are bullish or even if you are bearish, you first check on order block first, then search for fair value gap. Don't search for fair value gap if you don't have an order block previously. Okay, so we have the market here currently after mitigating the FVG, and now we expect the market to keep going up on a weekly time frame. This is a weekly time frame. So if we stretch down to daily time frame, you should see a very nice move from FVG. This is where now the market started giving you proper price action to know where the market's actually interested to go. So if you have a look at this, I think I should change this to blue or maybe some color. Okay, so if you have a look at this box, you realize the market formed a bullish engulfing, yeah, BLE. The previous red and this green candle formed a bullish engulfing candle pattern, and you see the two now adds up. So we have our first tick should be an order block, then the second tick check for a fair value gap mitigated, and after that you check for a bullish price action, which is in our case BLE. And now you're done with that section. Now we need to move down to our last time frame from the daily, which is 4 hour. So what do we have in a 4 hour time frame? Yeah, so in a 4 hour time frame, let me move this. So this is where we are doing our last higher time frame confluence checks. This is where we are doing our last higher time frame confluence check. So if you have a look at this, okay, we don't have really much here. So it's currently at a resistance zone. It is currently at a resistance zone. So when the market gets to the resistance zone, I'm just giving you one of the tools that I've been using, and it really works. So you go ahead of the time using the current low, the current swing low of the market. So let me just lay out that strategy for you so that you can try it out. Yeah. So predict high, predict swing high. Then after predicting swing high, start from swing low. So this is exactly what I mean. So you first predict swing high. Now predicting swing high here is pretty simple. Just use use a line above the current resistance block. So if this is your resistance block, just assume there's a liquidity grab a little bit above it. Then you also have your swing low down here. So in this case, we're going to use this as our swing low. Then after that, you introduce your Fibonacci. So this Fibonacci is a bullish Fibonacci, and you start drawing it from the ground up. So we're going to attach it to our swing low and to our presumed swing high. Then by the look of this market, we want to look at Fibonacci 38 and Fibonacci 61, yeah, and draw a line. So we have Fibonacci 38 and Fibonacci 61. Okay. Yeah, so now you have potential levels of retracement. So since you know that the market is bullish, let me just give one yellow, and 61, I give it a purple color. Okay, so the middle colors are, the yellow is Fibonacci 38 and the purple is Fibonacci 61. So you want to look at how the market is handling either of the lines. One thing you must have and respect in your mind is the trend. Where is the market going? The market has shown you from 30 minutes and daily and weekly and monthly that it is bullish. So when the market is bullish, the market always doesn't move like a straight line. The market doesn't move like this. Everyone would be a billionaire by now. It doesn't move. It moves in waves. It moves in a zigzag form. So since now you know the market needs to go up, you need to know the possible reversal points. Okay. Now the possible reversal points here will also need you to have, this one will also need you to have an idea of what happened in the past. Okay, so we want to look for a past impulsive market movement, then draw a zone. So what do I mean? I mean we need to look for an aggressive market movement in the past, like in this situation. Okay, but now in this situation we stretch it. You see? So that is the past market movement. Now, what do we use it for? We use it to study the market reversal points. So this box helps us to know that if the market starts creating reversal candle patterns inside this box, we will invest in the reversal. Okay? That is the box of investment. That's the box that tells you that, hey, any reversal inside this box is a potential reversal back up. So this is the reversal box. You need to always know. in any market. It works in any market. And check for the market in this zone. So the market can come like this, and you see the market reversing like this. You don't wait. You already know it's already happening inside my zone. Now, if it's happening here, your stop loss must be below the zone. So this is where your stop loss should be, and your TP should be above the resistance, because now you know the market has gathered much more power to break above the resistance. So that's one tool that you should use. This one, watch this video again and again. You will learn cool stuffs. You learn cool stuffs to help you execute profitable trades. So that is 4 hour. 4 hour, we developed a reversal zone. We came up with a reversal zone because we now know the market is trending up. Now we need to know where to pick our trades, where to make our entries, and we've now agreed that inside that box is where we're gonna watch for entries. Entry zone. Now, watching this tutorial will help you not to be a rookie trader in any way. You can never be a rookie trader if you are watching my YouTube tutorials, because you will learn to wait and execute at the right time. Now, rookie traders are while rookie traders are getting stopped out in the market, you are there patiently waiting, because you know the market is going this way and you've already prepared your sniper kill zones. And now that's our entry zone, where you'll be waiting for the market to come before it reverses back up. 1 hour is gonna be our last confluence, and 30 minutes maybe last confluence. So if you have a look at that, the market is trying to give us an impression that it's reversing, but we won't buy that. We have to see the market trickle into this box before we jump in. Okay, so the market is still telling us more about its bullish movement. Then maybe 30 minutes, more of that, it's telling us more of that. Then 15 minutes, most probably more of that. So if it can slam back down, and if it slams back down here, this is where we're gonna invest. So the first point of investment is in this box, and the next point of investment is after the market has broken above this resistance and retested this resistance. That is when it must break above, retest, and rise above. So this is your entry. Break above, retest, rise above. Rise above means a new candle formed above the resistance. Okay, so I think you understand this tutorial. You understood every step I explained, and if you apply this, you're gonna be a better trader. You're gonna be a better trader. Thank you very much, guys. Consider subscribing to this channel and leave a comment about what you would want us to cover, and I'll be back with that next time. So thank you very much. Have a great day.